Hello, everyone. Mike Arnold here, co-founder, Path Trading Partners, with the very soon to be on Bob Iacchino. We're going to take things sort of out of order so I can bring him on. By the way, if you are new here, please do consider subscribing, ring that bell, and hitting the like button. Let's just bring on the Bob. Bring on the Bob. Let's just see. And I get a good afternoon, Patrick. George, Charles, William, Dr. Michael, Sterling, Chris, Charles, AB, Nas Industry. There we go. All right, we're going to get straight to Bob. Because my head almost exploded today, so you know what? I was going to ask Bob with one question. I mean, besides my take, and I texted him afterwards, I thought it was incredibly dovish and wishy-washy, and Powell didn't know his ass from a hot rock. And when I almost fell out of my chair when he says tightening financial conditions, when all I've seen is since November them loosening drastically. And Bob sent this chart along, so I'm going to ask Bob now his take.
Yeah, so basically this is the last reading, which would be the February 1st release of the late January reading. We'll get another one of these on February 8th. The Chicago Fed releases the Chicago Fed Financial Conditions Index. And I look at it more than the Bloomberg Financial Conditions Index because I don't pay for Bloomberg. So this one is free. So what you're seeing here is that flat line is zero. Above the line is restrictive financial conditions, and below the line is loose financial conditions, accommodative financial conditions. So I think it's funny on here. Charles says, anyone count how many times Powell said price stability? I was counting how many times he said disinflation because I was very happy he was using that term because, again, we are in disinflation, but not deflation. And the press conference to me started out with a hawkish tone. And we did see equities make new lows. But then he completely jumped the shark by mentioning disinflation over and over and over again. Now, this wasn't the move we saw today was in part short covering. You notice the Dow didn't participate. So it was not a strong economy designated move, right? Or the Dow would have participated. So it was a lot of short covering, and it was also tech. And because of the yield flip, the yields went, the 10-year was down about 4 basis points. It ended the day down around 12 basis points. And the twos tens ended up basically staying at 70. So we saw a big flip in yields. Okay, yields went dramatically lower in the amount of time that they had to go lower. Okay, we've seen them go 12, 14 basis points in a day before. But in that hour and a half, I actually started tracking that a while ago. And today we had the 10-year drop 12 basis points as of about an hour ago. They might have dropped further than that. The last time they dropped 12 basis points or more, they dropped 16 basis points, and that was on January 6th. Okay, and that was another big dramatic day. But other than that, this is the biggest move lower in yields that we've had this year. Granted, it's not a long year. So that financial conditions index, that image that I asked Mike to put up, I put it up so you guys can see visually. Financial conditions involve treasury yields, okay, home mortgages, equity markets, which is counted for general wealth of the public, which is part of financial conditions, and stresses that banks are under. There's all kinds of things. It is clear visually here that not only are financial conditions loose, not only have they not tightened, but they've loosened. But it also is very descriptive how little time we have spent with tight financial conditions. Financial conditions have tightened since, what is that number there, Mike? I can't read it. 2021?
Just about mid 2021, they've tightened, but
okay, they tightened. But then they basically tightened just past Jesus Christ. They basically, you know what? I'm going to have to pull it up in order to talk about it real quick. But they basically tightened around late 20 to early 2020, right? As we were coming out of the pandemic, financial conditions tightened. But then they loosened all the way through 2022. And then the Fed started tightening rate, and they were still raised all that.
What the?
Did you hear that?
Yeah. What was that?
I have no idea.
That was really bizarre.
That was weird. It sounded like my voice, didn't it?
I don't know what. It's like something blipped up real quickly, but I didn't change anything on my computer.
That was very weird. Anyway, financial conditions started to tighten but remained loose and only briefly popped into tightening. And then they went back to loosening again. So the key to this particular news conference is several reporters said, do you guys pay attention to the fact that financial conditions are loosening? And he replied with, we've raised rates 425 to 450 basis points, so clearly conditions are tighter. They're not. So he just wasn't even acknowledging that overall financial conditions. He didn't even throw any caveats in there, like saying, well, the part of the financial world that we control has tightened, but the market hasn't responded. He had ample opportunity to basically tell the market they were wrong, and they did not. He did not do that. So, yeah, this will, if they now fail in the inflation fight, in other words, if inflation gets down to 3%, 2.5%, and then rockets back up, this will be the press conference everyone refers to. And the last thing I want to talk about, Mike, and then I'll let you guys go unless there's any questions for me. They're going to recalculate the way they release CPI. So I asked Luke Grumman, who we've had on the podcast, to explain to me what the actual math was. And his response was, I'm not really the person to dig into what the differences are going to be. But if you think the government has it in them to give basically Jay Powell an out for continuing to stay tight, if you believe they have it in them to do that, then that's what this is going to be doing. I thought that was a pretty telling statement from Luke. Now, he's pretty pessimistic, but he basically believes whatever the outcome of those calculation changes are, they're going to give the Fed an easier path to 2%. That's his opinion. He doesn't know what the changes are, or I'd rather say he doesn't really feel like he could dive deep into them and explain them. But he believes that they're being done so that the Fed can have an out. That's it.
Hi, Bob. Will March be the smoking gun when he decides rate? I'm having a hard time reading. Rate futures, if he pushes higher, will mistakes take him seriously then? Will markets take him seriously then, along with Q1's earnings dragging it down if rates rise past the initial 5%?
Maybe read the second one by Charles, because I think you know what he means by that. But
if the unemployment rate has been volatile for the past year, same with unemployment rate, but the continuing joblessness has been moving up since October, while the initial joblessness has been declining. Average hourly.
I think you're asking, Charles, if when they move one more time, is that going to be listed as the mistake? I still believe that without saying it, the Fed would like to see the economy go into recession. But look, the actual term recession matters less and less. I was listening to former Vice Chair Richard Clarida speak today, and he reminded the viewers watching, so me, that there was a recession in 2001 and then another one in the 90s where we never had negative GDP, and they were very mild recessions, and they were stated a recession later by the National Bureau of Economic Research. And his point was, you can be in a recession without even knowing you're in a recession because there isn't really a definition of one anymore. So I think the key is the word recession doesn't matter. I don't think Jerome Powell believes the economy has slowed enough. I just think he believes it's easier to boost the economy back up And that's why he wants to err on the side of caution. But he was not aggressive about that today. He was not clear on that if that is what he believes. So I don't think that they're making a mistake. I think if they err on the side of cutting too soon, that's going to be the long-term mistake.
If the err on the side of cutting too soon, that's going to be the long-term mistake. Well, the market's
That's going
up.
to be.
Did you take a look at the Fed Watch tool farther out?
Well, I looked at it prior to this because I did Ninja Trader today. When I looked at December still had the probability of a 25 basis point rate cut in it.
Because all right, they have
November still had the highest probability of nothing, but the second highest probability of a rate cut.
well, right now we have May. Highest probability is one more hike and May being flat, and then September's still flat. I skipped July because it really doesn't matter. But cut in November now, and a cut in December.
A second cut in December.
Yeah.
Okay, so the way it was this morning was no cut in November, although there was a probability of it. The highest was no cut, and the first cut in December. Jerome Powell said himself, I really don't see us cutting rates this year. But then he added a caveat to it. He shouldn't do that. He goes, of course, if the data changes, we certainly could, but I don't see it that way. Those were the dovish parts.
Yeah, it was always like, yeah, but, and then the whole stuff where, like, we're in unprecedented times. We've never been in this kind of pandemic. Well, and we don't know how to drive this ship. So we're just gonna. Well, then why do we have you? Can't we just go to like the Taylor rule or something and get rid of all you people who used to trade in front of your decisions?
And it's crazy to me if you say over and over again, like that you're worried about wages, you're worried about inflation, and Amazon bumps up their entry level pay today, the largest employer in the country, basically, bumps up their entry level pay today. It's crazy to me. It's crazy.
So, all right. Well, I don't know. I'm just, and then we have. I'll give you an example of the loose financial conditions. Sterling, did you put in the earnings from Meta? I mean, they announced a $40 billion buyback. Earnings, the revenue was better, but earnings was an absolute disaster, and it's up close to 20% after hours.
Yeah.
I mean, okay. See, let's just go buy it all. So again, as I said, we're in trailing mode. Well, I'm in trailing mode. And when it turns, unless we get a major topping pattern. If it turns tomorrow, it turns. Until then, it's trail because the juice is flowing. I mean, you can see.
Like Sterling is scolding Coco here. I don't know how many times we can say we don't exist as bearish or bullish people. Mike and I are not bearish, and we're not bullish, and we're not neutral. Okay. We have opinions of what is likely, what the probabilities say will happen next. And that next isn't even designated by a time frame. So people say, well, how do you even make any money then? Well, because we're smart. We take advantage of things when they occur. We don't make predictions. Everybody's always trying to get us to make predictions, and we don't do that. The predictions, let me rephrase that. I do make predictions, but my trades may be different than my predictions. I may not have a trade based on the prediction at all. So I may say I think this is going to happen. As a matter of fact, I said it. I don't remember. No, it was today. I said on crude oil in the Ninja Trader show, I told them that I thought crude oil was going to 95 before 65. They said, you're long crude oil then? I said, no, not at all. I don't have a long position on crude oil because I don't have a pattern that I want to trade. So there's a difference between asking me what I think of something and asking me what I'm actually in. Everybody knows where my position is in the S&P. I got out of my longs at the beginning of the year. That's my position. And I don't think the October lows are the lows of this particular bear market. That's my position. That's it. Coco says, but you sound more hawkish than Powell. I don't care how I sound, Coco. It doesn't matter. It doesn't matter to me how I sound. I tell you guys exactly what I think. So does Mike. Literally word for word what I think. So it doesn't matter to me how you guys think I sound.
All right. Well, you'll be back tomorrow afternoon.
Yeah, I'll be back.
We'll let you go then for now, so I can just get to some analysis, and then we can have other non-Powell related questions tomorrow.
All right, guys. I'll talk to you tomorrow. See you, everybody.
Bye. All right. Let's see. Again, from my perspective, oh, look where we stopped. When the 12,503, there we go. 12. By the way, the doubles that never triggered are off the table, as can be seen. We should this 12,560, then 12. This is for the Nasdaq 12,679, then potentially 12,846, which is a very, 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 very key level. Sorry, I was off with one of those. 12. Let me go back through this. 12,674 to 12,697, 12,841, then 12,987, 13,000. Does that tip it to anything long term? No, it doesn't yet. It's still in trailing mode. It's still in trailing mode from the earlier buy patterns. Other than that, the larger sort of double is still on the table, but the S&P is still in trailing mode. But the little mini double, potential double I should call it, that was not triggered today is off the table. So we don't have those anymore. We have a closed little pullback, still got 9 minutes to go. 41.49.25 was the next little minor harmonic. Then we got 41.89. Then we have 42.24 to 42.29 are the next key levels higher. Major support coming back in at about 4,085. The next major level support is now back at about 4,016, 4,020. So we still have a potential pattern, but it's a long way off. We don't have a short-term pattern at this point. Nothing yet. You can see the little explosive move, and now you got that little dip, and then the rally and stalling out. It's trying to spike above there because it's not sustaining anything above there. The Dow, as noted, is technically down on the day. Down 13 basis points, where the Nasdaq's up 297, so almost 300 basis points. Dow's still in the range. So nothing new there. Russell, little breakout, hit that 87.5 harmonic, so completed that little move. Interesting enough, back to the other 1967 harmonic. Looks like it's going to close right around there. So the next key target is 2020 in the Russell. Major support is all the way back at 1900. Minor support, 1920. Still, besides that cup and handle that triggered back, that Sterling talked about, that triggered back, when did that trigger? On the last Friday, little pullback, and now up through the first target, which was stop reduction, hitting the 87.5, different strategy, but still important because that would at least be, if you're trying to play for the bigger thing in the Russell, could utilize that as another stop reduction or a partial profit, full target on that cup and handle 2020. Meta. Am I still expecting another rollover play long term? Yes. Is it fighting it now? Is there a topping pattern? No. Could we even revisit if this juice continues in the market? Could we theoretically still even go back to 231 area to 236? Yeah. So the only little bearish setup was this potential double going into earnings. The big thing, you're announcing a stock buyback, you miss on earnings per share, and you're up nearly 20%. Those are the markets we're in. Why am I leaving these harmonics on this? Because these will be key levels for a pullback, especially here. Look at that with the harmonic. So it's literally, that's why you see the NASDAQ up as much as it is versus the Dow, and even way outpacing the S&P. It's buy everything in the moment. And you see that was the major thing after the close. We didn't get through this. Tomorrow we got ConocoPhillips in the morning, Bristol Myers Squibb, Honeywell, Hershey. And that's what I'll be glancing at. And then remember, tomorrow after the close, Amazon, Apple, Alphabet, and Qualcomm make up over 12% of the S&P 500. So that could get interesting with earnings. So do not ignore stuff after the close tomorrow. Where else do we sit? Again, that still the one more rate hike is being expected in the FedWatch tool. And on the calendar for tomorrow, again, we have initial jobless claims, continuing jobless claims 1 hour before the open. We have factory orders, and then it's all pretty much quiet on the Western Front until non-farm payroll Friday. So we still have non-farm payroll also on Friday, and the major earnings tomorrow after the close. The market map, you can see a lot of your chips just, again, getting bought up like no tomorrow, especially NVIDIA. And everything, though, getting bought up. AMD, what was that up? over 12.5%. We're in the raw juice mode. Tesla up close to 4.75%. You can see here the only thing getting beat up today was the crude rollover again. Technology, I'll have to refresh this one more time. Technology up 257 basis points. Consumer cyclical. Communication services just leading it higher. So we can't fight the juice until there's a topping pattern. Let's just glance at Tesla too. But that's a clear example. Not just Meta beating, but Meta up with the with that huge earnings miss and up 20%. And the daily user stuff and the monthly users were not that impressive. Tesla, yes, this is still like a little mini this double top's not off the table. That's the only bearish pattern on it. That's the only bearish pattern. Although on a continued rally, 190.52, then 238. I'm going to glance it. There's your NVIDIA. Remember, we had the inverse head and shoulders return there. So closing in on the next minor target area, but the next major target area is 231. This thing's going to just go nuts with the PE ratio again. AMD through its 200. If you were trying to do something on the short term, this is the official trigger for the double, although it'd be really hard to get reward to risk at this point. But if you're trying to trade it intraday, 188.82, 93.62, 98 area are the targets to the upside. Even Intel looks like it's going to form the gap, fill the gap from their horrible earnings. So even, this is just insane, but oh well. Oh well. That's the markets we're in, so you gotta play along. Gotta play along. We got easing financial conditions. The notes I was watching for this 115.13. We snapped up there. Now I am paying attention to this. If we do stall out in this area up here, we don't have a little double top yet. But I am paying attention to this 200 right at that 75%. So that's, and then I will go to 115.30 or roughly 116. Remember, anywhere up between these red lines is a potential topping area. Dollar index got smashed with the Dovish Powell. So I'm watching for this 100. As I talked about, broke down below that 101.10, targeting 100. VIX, again, no fear in this market. This now the potential double off. We clearly a triple. And this is the lowest it's been since last January. Crude pulling back, stop level not hit on the triggered double bottom. Cycle's now firmly at the bottom, but no additional moves up at this point. So I'll have to see if anything forms overnight. Gold broke up and then what? And by the way, you have this turning into the triple. What was the the official closing price now, because we were running up. Again, it's still in trail mode. Next target was this 1970 area. Actually, the next target was officially 1970.8. The high was 1970.8. Not trying to hit, again, things to the exact tick, because that's actually, I hate when that happens, because if you have resting orders there, a lot of times they don't get filled. But look at that, where it's settlement. Look at that settlement. Still, it's in trailing mode, though. Silver, still in consolidation. Copper, finally rolling over. Watching now for the bigger pullback in there. The yen broke down, so now I'm watching for a retest of the low areas. The 10-year still up in this range, but not above 50 yet. Yet the pound and the euro rally. The euro coming up to next minor harmonic. Next key level is 110.37. It's still expecting to that. After now we're above that 50% harmonic, so expecting some higher prices in that still. Bitcoin up with the go-go juice, but not breaking above the most recent swing highs. And no, this would not be a double because you got this wick over there, so triple top there. All right. That's where we sit. That's where we sit. Not seeing. Will I do Apple, please? Will I do Apple? Yeah. This is still a very sloppy double top right here. That's the only bearish. That does qualify. That's the only bearish thing. So that's a great level right at the bottom of the daily rotation zone. And you have Apple earnings tomorrow afternoon. 141.34 is key. Other than that, to the upside, since it's still coming up with the rotation zone, the first target is 148. Then you have about 150 area. And if you get some power move on there, 153.56 on a huge gap up. But those are the key things that I'm watching. If you do have anything negative come out, that's the only thing that would shift it into short-term bearish mode. Other than that, it's also in a trail mode. How high do I see it running with the NASDAQ? I'm just using the next key target areas. The next key target is the next minor one is 12,675, 12,841. We start getting above there. Key would be about 13,333. Does that shift it into a long-term bottom formation? No. Not yet. When does the Intel management get the hook? Well, they're cutting pay and everything else. I'm more worried with the Intel now that if they do a dividend cut, then that's off the table as a dividend play for me. So I'm managing any Intel positions accordingly. All right? Because I think Intel's still in, based off of their last earnings report, still in for a fairly decent world of hurt. They've started cutting back stuff even more, and their earnings report was ugly. So it's now, from my perspective, unwind before add. And be very patient on the ads. I'd rather miss out on a little upside, and then if they keep the dividend in place, be prepared with a better level to the downside than chasing anything at this point. By the way, you're going to be watching for a weekly close. See this week if it closes above this 12 for the NASDAQ, 12,519, 12,520. Let's just call it that. It's an easy level to remember. Why? We close above that on the weekly. I'm watching it on the weekly. We could easily hit that 13,333. It's going to really be interesting with those big earnings tomorrow. And also keep in mind, as these earnings roll off, you have things like you have Apple buyback programs kicking back in again. So you're going to have more buyback programs kicking in. So is there a underlying bid to some of these mega caps? Yeah, there is. Keep that in mind also. Does that mean we cannot have a rollover play? No, but we don't have one yet, and it has to do as I've talked about repeatedly, even on these pullbacks, there is major support in here. So it has to do a lot of technical damage now. A lot of technical damage before we get a new major bearish pattern. We at least need a pullback and then a push higher at this area. We are stair-stepping with momentum winding down and cycles at the top. So I am still watching for another rollover play, but unless we really break through some key levels, it's just a short-term rollover play. Where is it? Oh, come on. Yeah, there we go. For the S&P, the medium term flipped back on the week of January 09. It shifted. That's a medium-term buy. We don't have a long-term buy. We have a medium-term buy for right now. For the NASDAQ, if this week closes above last week's close, it looks like you'll get a medium-term buy. The Dow, has been in buy mode since October and still in buy mode in consolidation based off the aggressive stuff, and even the conservative stuff's in buy mode now. So in the medium term, there's still room to run. In the long term, not yet. Marcus just came. I've been in trailing mode since we've got the bottom modes. I'm still expecting, until the long-term stuff flips, I'm still expecting new lows this year. In the short term, it's in trail mode going higher. So that's where we sit. Again, any little bearish pattern, we had the potential patterns that didn't trigger. I'm always going to post both bullish and bearish patterns. Until the last buy signal from my stuff was back on the 20th. Prior to that, we had a buy around the 23rd or the 6th. The last little rotation and %B buy signal was here. The NASDAQ, we completed the double bottom, and then we got another buy signal on the 20th. And it's still in trailing mode from there. So that's where we sit. That is where we sit right now. So again, that's why I'm going to wrap this up for now, because it's been a long day. But until we get a significant topping pattern, or until we break at least through these daily rotation zones, and not the top of it, the bottom of it, there is nothing to be bearish about besides short-term pullbacks. If something changes, even with markets at the cycles at the toppy top, we could just see pullbacks to very key levels. If we start breaking those key levels without a major bearish pattern, then we'll take notice. But remember, the point is not trying to call the exact high or the exact low. It's trying to put on the high probability trades. And right now, would this even be like unless it was a short-term day trade breakout, is this just buy this and put a stop down here and walk away? No. This, because of where cycles are, is a very aggressive breakout, but the next pullback will tell us a lot. That's where we sit. So don't fight the short-term trend. Be prepared with stops and positions for eventual rollover moves, and know where your stops are, know where your trailing stops are. If you have a bullish pattern, then you're going to keep trading it. Again, is it guaranteed? No. Nothing's guaranteed. Like the NVIDIA stuff has probabilities associated with it, but it's not 100%. So you're going to keep raising your stops and utilizing the targets on NVIDIA. Even though it's getting to nosebleed valuations again. Look, earnings on this aren't till the 22nd of February. We're at the 1st of February. Could this take out some more key targets, the upside, before then? Yeah, even with a pullback. So you keep trading it with the pattern. AMD, you got a pattern. You're going to keep trading it with the pattern. Look, my next thing is getting a close above 85.83 because the final target to the double and the 87.5 harmonic is virtually the same. So could it run up there? And look at the PE of AMD again, 85.20. But we're back into where valuations don't matter in the short term. They're going to matter again in the long term. So that's where we sit. Now, does that, all right, you get this, because I'm going to just leave it at that I'm wrapping it up for tonight. Is this a guaranteed pattern? No. It's got very strong probabilities, around 70%. Could something happen tomorrow that just obliterates the market? Theoretically, yes. Could this and NVIDIA and whatever else you're triggering with a key pattern turn around? Yeah. Is there any indication it should? No, but that's why you use stops. That's why you use stops. By the way, Microsoft back to its 200. It's 200. So that'll be interesting to see where it closes the week out, above or below. All right, let's see. Well, thank you. Again, it's not the calls, it's the stuff I've researched and put out there. What I'm trying to even, that's why I don't try to tell people how to trade or what to trade. What I'm trying to show people is a consistent approach and analyzing a bull and a bear side. So however you want to do stuff, and also trail, and also don't predict, trade. There's a big difference between prediction and trading. There's a huge difference. A prediction's not worth much. A trade is worth what's the reward to risk. I have a quick question about trading under the 60-minute chart. Most times price hits a harmonic zone. It rejects it unless it breaks through with momentum or forms a reversal signal just above. For short-term trading, should I set profit targets for trading in between the harmonic zones? I generally use the harmonic zones as key targets for either stops or raising stops or for trading between them. So as it gets past one harmonic, I target the next one. Okay? And don't go too short on your harmonics. I mean, I'd definitely stick at 1 hour and above with the major swings. But I like to target all right, for example, I'm trying to think of something that is good to do. I'll just, on Intel overall from trading around a core position, I love to utilize the harmonic levels as key support resistance. So let me pull off this other one to not confuse it. So it breaks down from this one, targeting this one, then targeting the next lower. We break down below that one, target the next and the next lower. And you see then it bounces up, trades between these, and breaks out and then goes to the next harmonic. This can be applied on shorter time frames as well. It continues higher. Where's my next target area? At least intraday, it's 29.84, and then I'd be using the higher intermediate level in front of this 87.5. But this is the kind of same thing. You could pretend this was a shorter term chart and still use the key major harmonic areas to trade around them and use them as targets and or stop levels. So trading around, whether you're just trading directionally or trading a core position, that's personally how I like to use the harmonics, separate from a specific set of harmonics for a trading pattern. All right. What did I miss? I'm trying to invest like in CSX, which had earnings the other. Did that actually? I didn't. This is not one I actively follow, but CSX. Why did I just map this out? So I know we talked about this with earnings. It broke down, but what did it hit? It hit the 50% harmonic, right? What do I watch between the 50 and 62.5? I watch for potential bottoming pattern. Why did I just measure this out? This is how I have a very consistent approach. It pulled back. 75% harmonic or lower gives me a potential double. What happened yesterday? And I would use the conservative targets on this. Why? Because it's going back into a major consolidation area. And this is just in front of that gap fill. So, triggered yesterday, gave a little pullback to the breakout point with the gap open this morning and then running up to the first target. You can see it easily on that 4-hour chart too. If you're using aggressive targets, it's only hit the second one, and so now if it continues to run higher and you're out but it rallies a little or opens and then starts rallying, I could always use this 32 level, which is another gap right here, as an intraday target also. So for trying to trade something CSX, we had a double bottom pattern, triggered, gave entry on a pullback to the trigger point, and then rallied up to second target. But as I said, I would use the conservative targets because this is going back into a consolidation area with cycles at the top and overbought again. Does that mean it has to stop? No, but if you were still hanging on to this, the next key target would be 32 area. 32.03 is the exact close. I'd use a target just in front of 32. All right. Who's that? Is this for me, Sterling? Would I be would you folks be willing to do a Twitter Spaces live stream? Or are you guys discussing recipe? Are you going to do a Twitter Spaces to discuss recipes? Oh, well. All right. So that's where we sit. I will wrap it up since... Do you want me to leave the live stream running so people can discuss recipes? It's turned into recipe hour. Forget this technical analysis garbage. Forget this stuff. I'm probably been muted by everybody, and they're just like, let's talk pork tenderloin tonight. You know? See, Ramsfeld says, yes, I've just been muted. Yes. Bring that up with, I do follow him on Twitter. Bring that up with Bob. Bob does all the guest bookings for Bob and Jim. You're going to talk about a teacher? Well, that's fine. You don't invite me. Great. Have at it. You can say whatever you want, as long as it's bad. Why? I don't understand why not. So that's where we sit with everything. I'll leave it at that. Hope everybody learned something from today. And we will see you tomorrow morning back in the saddle. Bye for now.